Today on the show, the pleasure of speaking with Peter Badger, co-founder of Global Investor Alliance. Now, Peter and his wife are on a mission to help people obtain the mindset, strategies, and tools to create recurring income from global real estate investing and ultimately accelerate their wealth building trajectory. Peter spent 25 years on Wall Street and in Silicon Valley, and today his real estate investing and education is his full-time endeavor and quenches his thirst for purpose, global travel, and adventure. To top it all off, he is most passionate about the consistent income building capabilities of multifamily and the intergenerational wealth building available through farm and agricultural investing. And to top it all off, he's an expat like I am, coming to America and making it happen. So I'm really excited to have him on the show today to share his incredible story with me. But enough out of me, let's get him out here. G'day, Peter. Welcome to the show. How are you doing today, mate?
Good. How you doing, Reed? Thank you for having me.
Oh, mate, my pleasure. Before we dive into the nuts and bolts, where are you dialing in from today?
I'm dialing from the mountains in the Rockies in Colorado. So very excited to be here for July 4th weekend. So.
Yes. Are things shutting down there in that state, or are they staying open?
We're opening. So we've been very fortunate, and people wear masks, and it's been,
been fine.
So good. Knock on wood.
Good knock on wood. Unlike here in LA, where our 4th of July weekend is no beaches. So we're going to be stuck at home. But mate, let's get into it. So the first question I ask all my guests when they jump on the show is, rewind the clock and tell me how you made your first ever dollar as a kid.
Paper round, like most young kids in our generation, maybe.
Mm-hmm.
So I remember I used to do the morning round because you couldn't get the evening round, because that's the easy one to get. So I used to do, 6 mornings, Monday through Saturday, in blustery England, raining most of the time, for £1.55 a week. How's that?
Wow. I don't know if that ages you, or we were getting really cheap labor.
But I think the worst thing was like a 12, 13-year-old kid, is I used to blow all that on chocolate on the Saturday afternoon when I got the wage. So,
But mate, tell me a little bit about your story, the coming to America story, because I'm interested in it, being an expat myself, coming to the land of quote unquote opportunity, and really your journey. Because I mentioned before you'd spent 25 years. Sounds like you've been in the United States for some period of time, because you did some Silicon Valley stuff and you were also on Wall Street. So maybe give us a bit of a background.
Yeah, the brief US story is I was university in London, and we used to get these American students coming across for the summers. And I ran the bar in the summertime to make some extra money, and you got to go with a bunch of people, and they used to invite me back, and they actually paid for my ticket to visit Michigan State University.
Oh, wow. So okay.
I went back there and then, quit college, and I moved straight to the States, because it was kind of like, I just like the freshness and the positivity of American, business and society in general, because it is still true that you can achieve anything because of the size of the market in reality. 300 plus million people, and you can do things that you can't do in smaller countries. And so I just loved the concept and moved.
It's interesting you bring that up, because I've actually spent some period of time in London as well, and Australia is very similar. It's a British colony. It's still under, not British rule, but it's under the Commonwealth. But that's sort of, I don't want to say tall poppy syndrome, but there's just a different way of Aussies and Brits compared to Americans, and sort of the land of opportunity. I don't know if it's an ego thing here, but it's very enticing to a lot of us on the other side of the pond.
Well, I was asked for the first few years, from my friends back in the UK, why you live in America? Because people have, let's say, opposing views of Americans and the American lifestyle. And, I don't want to Brit bash, but this story is necessary to do that slightly, is that from a mentality standpoint, I used to say, listen, if you see a Porsche in America, the average person look at the Porsche and say, hey, it's a beautiful car. If I work hard enough, I could achieve that. In Britain, they'd see the car in the street and they'd say, I'm jealous, and scratch it with a key. Now, being slightly facetious, but the mentality of believing and, frankly, working hard to gain those advantages in life happens more in America than often Commonwealth countries, like we're from.
Interesting. Yeah, I find when I go back to have to quell my relative success and not talk about it too much, because I do get that tall poppy syndrome, and people may not have left and they get jealous, or not jealous, but, and I've had Americans tell me the same thing here in the States. Like, it just depends where you're from, and the fact that we have an accent here that you don't really maybe come across it as much. Have you seen that part of it at all in your experience going back to the UK?
The jealousy, I'm interesting because I was in Silicon Valley for a while, and I became a mentor of some startups back in London, Silicon Alley, as we call it. And I've got to tell you, in America, in Silicon Valley in particular, everybody you meet wants to help you and help you succeed. Back in London, people were taking pot shots, criticizing your business model, your belief system, what you're trying to build, etc. And it truly is the lack of positivity, I think, which doesn't allow certain places in the tech scene to basically break through, I think, personally. And there's it's hard to be generic about this stuff.
Sure. No, but I think I hear you on what you're trying to say, because definitely that abundance mindset, quote unquote. Yeah. And I do see the other side of the coin where they're, from home, you've got friends and family, they think it's all a bit of a circle jerk. But, you need, it's once you're in the thick of it and coming and doing business here that you see that just the ability to, okay, you can pull yourself up from your bootstraps if you want to. So I guess that I've had a couple of other expats on this show. What's your experience been like coming to the United States and having that accent? Have they treated you any differently? Open arms? I've had some Australians actually say to me that in the South, at least, they're like, we love having, the adage is, we love having beers with Aussies, but when it comes to business, all the Australians need to leave the room. And I've had the complete opposite, experience. So I was wondering, what's your experience been to date?
Mine's been 100% positive. I mean, people listen to me because of the accent. And I think I open doors more because of the accent, because we're different from everybody else they hear.
Yep.
I think for me, I moved to New York City in my early 20s after college. And so you can imagine it was like a, kid in a candy store from a business opportunity, a relationship standpoint. And so, I think we get away with a lot more. I think it's, it was all positive on all aspects, having English accent in America.
Well, and I think the big things that you mentioned Silicon Valley, you mentioned New York, you mentioned, you're calling in from I know you now live in Denver. They're very world cities, they're boiling pots of different multicultural centers. And I remember my nervousness coming to the United States, trying to get a visa, for a job, and then realizing, and when I went to New York, everyone was bloody a foreigner, so it was everyone was on a visa. So it wasn't my own, it was my shortcomings of thinking, oh gosh, no one's going to offer me a job. But it's like, oh, you got a visa, cool, get in the line with the other guys. There's 10 other people in this company that do the same thing. So, but mate, tell me a little bit more about how you got into the world of real estate investing and now starting Global Investor Alliance, because this is really the nuts and bolts of the life you want to live. And really, when was that epiphany moment of saying, screw this corporate world and screw Silicon Valley, and I'm going to go out on my own and try to create something from nothing?
Well, so I think I had kind of two phases to my journey. So I spent 18 years on Wall Street, lived in New York, Tokyo, Hong Kong, Zurich, back to London for a while. I did all the financial centers and I drank the Kool-Aid. And so from my perspective, I'm like, it was all about stock market. And then I did get bored after 18 years of all the corporate, meetings and politics mainly. And I was like, let's go and start my own business. I had a couple ideas. I searched for a few years. And then I jumped out to Silicon Valley. I was living in Northern California in Marin County, just outside of San Francisco at the time. And we basically, me and my co-founder, Stephen, we started a tech company in the enterprise software space. We did bootstrapping for a couple of years, VC funding, Series A, Series B, raised about $24 million. And it took about 8 years to get acquired. And so my actual real estate journey, even though I'd had some single family home rentals, a couple prior to that date, it wasn't until I actually had the exit on Silicon Valley that I had to start thinking seriously about what to do with my assets in reality. And so just to stay there for a second, in Silicon Valley parlance, people ask you, did you have a single, a double, a triple, or a home run? And just to give people who aren't familiar with this stuff, a single is 50 million or less exit, 100 million double, 500 million, and a billion, so you get the gist here. So, mine was a single. And once federal and California state tax had been taken out, it was a few million, but I had to really think seriously about what to do with that. So I started surveying everybody in my network. By now, I'd gone from corporate Wall Street people to Silicon Valley and entrepreneurs. And the message I received was actually quite interesting for me, because everybody said, you can only build your wealth through real estate. And they said,
even the Silicon Valley people,
mostly the Silicon Valley people, because you had a few of the old boys and been through corporate careers like I had, and they were like, stock market. Where else am I going to put it? One of those kind of things. But there was a whole raft of people who were mostly founders, CEOs, multi-exit guys, and one woman. Sadly, it's a bit of a demographic issue over there. But basically, they all said, listen, don't put it in the stock market. It's a bit of a gambling routine. Put it into hard assets, real estate, mainly being that one, gold, etc. And so I actually went through and interviewed people, and I got a couple of contacts. I networked with them. How do you buy real estate? And I went down this path, actually, and I probably met the wrong person to start. I started buying single-family homes en masse. And so the really important thing about my journey was I went through 4 asset classes to really learn the mistakes I'd made early on over probably a 4 or 5 year period. And so it was classic. So I kind of like met some network that was selling single-family homes, turnkey. Living in California, like the house we were living in, it's a couple of mil, isn't it? California nowadays. And then right now it was near the big cities. And you could buy a 3-bed, 2-bath, 2-car garage house in Florida or Texas for $100,000. And I was like, what is this land of non-California, non-New York housing? So I went on this journey. And so I basically started buying single family homes. And what most people don't realize as an American resident or citizen is you can actually have 10 traditional mortgages per person. So if you're married, you can have 20 traditional mortgages. So you could buy a $100,000 home, basically have a $75,000 mortgage, put 25 down plus $2 or $3,000 to close, and you can just start building a portfolio that way. And they start bringing in between $300-400 in cash flow, and that's a turnkey. There's no value out at that point. And I started doing that. And so over 18 months, I actually ended up buying 21 single family homes. And it was great because they were turnkey. They'd just been renovated. I was lucky with some of the people who had been renovating them, so they were like pretty high quality. And I mean, so people don't talk about money in real estate much. So I'll kind of give a flavor for this. And so I was earning net income of about $12,000 a month on those 21 single family homes. 8 were mortgaged, 13 were cash. And in some markets, so I had like 4 houses in Pittsburgh, Pennsylvania. And you couldn't get a mortgage because they were like 50, 60 grand. And no one's going to bother giving you a mortgage for 30, 40 grand. It's not worth underwriting, frankly. So I shaped this portfolio, 3 different states, Pennsylvania, Florida, Texas, 21 homes. I had 6 property managers, and it was all going fine, $12,000 a month, 6, 7, 8 months counting. At the year mark, things started getting a bit dodgy, let's call it, because tenants started moving out. And then I realized quickly, well, now I've got a tenant vacant house. I've got mortgage in some cases, taxes, insurance, and I've lost this for 6 weeks, got some rehab costs, repainted, fixing the stuff that's broken. These were, by the way, in kind of like C+, B- markets. So it wasn't a great tenant base for some of these neighborhoods for the $100,000 housing. And so I went through this journey basically whereby my income would go from 12 to 10 to 10 and a half to 7 when somebody broke in a house and stole an air conditioner when it was empty for a month. I mean, so you go through this single family journey. I had 6 property managers who really, it's hard to find decent property managers, So I ended up in at the end of this 2-year journey, I was at this real estate meetup in Tampa, and I advised people listening to this, watching this on YouTube, whichever channel, go to property meetups any way you can. Just network all over the place. And so I pitch up in this Tampa, Florida property meetup. I'd just been to see a property manager to work out why my 2 houses were empty, work out how to fix this stuff. And basically what at a meetup happens, you have an intro section where you all give you a 30-second elevator pitch. Then you have a bit of a presentation, then you network at the end. And so I gave my elevator pitch. I thought it was a bee's knees, I was like, yeah, my name's Peter. I moved to America, did a bit of Wall Street, Silicon Valley. I gave my BS story. Oh, and by the way, I'm financially free. I own 21 single family homes. That was my 30-second pitch. And I was a little bit arrogant, to say the least. And, it's hard to look back on those days, who I was. I was a bit full of myself. And this guy at the end of the presentation came to me and said, well, you're an idiot. I'm like, what are you talking about? I was like taken aback. I'm like, oh. And he said, what you should have done is you should have bought 1 or 2 single family homes to understand the mechanics and how it works, and then started buying multifamily buildings. because you could have saved yourself a hell of a lot of hassle. You could have bought like 2 homes and then bought a 20 unit, saved yourself 18 months of hassle, effort. Oh, and by the way, your business model is broken, because if they break, you got 21 roofs to fix. If you've got central air, you've got 21 air conditioning units. You've got plumbing. We know the game. And so it's like you've got infrastructure issues. Your expenses are high. You've got single tenant fault lines in every property you have. Buy a 20-unit building, 3 or 4 or 5 can leave. If you buy it right, you'll be fine. And that was like a real eye-opener. And so after being shocked by his initial calling me an idiot, I actually pivoted quickly to multifamily. I bought a couple of buildings and sold a bunch of single-family homes at 1031, which is avoiding capital gains into these homes. And that was a classic. And so this journey just continues to the asset classes. So, you go to another meetup. And I was doing 3 or 4 meetups a week, by the way, during the peak season, whatever state I was visiting, to either look for housing or look for multifamily to do my analysis of properties. And met another couple, and they were like into mobile home parks. And they were like, well, why are you buying multifamily buildings? Because in a mobile home park, there's no building. It's often a pad. You got a piece of concrete and a couple of utility connections. So what are you messing around at? You're an idiot, And then my journey ended must have been a few months later than that. And it's like some person I met, and they said, well, I'm sorry, you've got it all wrong. Why wouldn't you buy agriculture? Because there's no concrete pad or utility hookup. And so, I've been through this journey, and I think what I've concluded is, and what we teach our investors in the Alliance is really 2 asset classes predominantly, because I've been consistently able to make money and build my wealth on those 2 asset classes. And so the first one is multifamily in the United States predominantly, because the US is probably one of the most predictable and consistent real estate markets on the planet. There is so much data that you can analyze around market cycles. There's 400 MSAs, metropolitan statistical areas. We have all the data from both the metro area down through the zip code, down through the actual neighborhood, block by block, where you can work out, population growth, job growth, hopefully lowering crime rates, medium condo house values. It frustrates me meeting people who jump into real estate because some mates are broke, realtor, and said, oh, you should buy one of these. They don't do this analysis. So, to summarize the US multifamily real estate, there is so much free data out there to help you analyze on a top-down or bottoms-up basis of whether that market is worth investing because it's growing or not. And then you can do the analytics on the actual asset itself at that point. And so, honestly, if I was to tell anybody anything, it's, look at multifamily, smaller buildings or syndications if you want to club together with other people, and that will bring you consistent wealth building over the years.
Yeah, I want to echo some of the things. Like, I think the one sentence you said there, 400 MSAs. I've been quoting that term for the 8 years I've been here. When they say, "Oh, the U.S. housing market," particularly when just after 2008, "Oh, the U.S. housing market." It's like, well, the U.S. housing market actually has 400 different MSAs, and within each MSA, there's certain blocks or certain north, south, east, west side of the tracks, east side of the tracks. And you could either be north of a certain street or south of a certain street, and very block by block. And that was one of the biggest things I learnt moving to this country, is just how it is so block by block, and how there is the primary markets that we talk about, the New Yorks, the LAs, the San Franciscos of the world, but then there's these secondary, tertiary markets because the population is so massive, right? 350 million people, I think it is. So you can inhabit north, south, east, west, where, coming from Australia, we're all confined to the coast. So it's just a completely different scale here. One thing we've obviously spoke about a lot in multifamily here, but really I'd love to get your 2 cents on the agricultural side, because I've never actually interviewed anyone about agricultural investing, and why I loved your analogy of, single family. Well, you got 20 roofs. Oh, you got to go to multi because you just got one roof, and then screw multi. You don't even need the building. You just need you just need a pad. Oh, screw the pad and the utilities. You just need your agriculture. So I love that sort of journey through that. So tell us a little bit about agriculture and why you love it so much.
Yeah, I think for me, in my interview, actually, when I exited on Silicon Valley, I was chatting to some very wealthy people. And actually, they put me in touch with their financial advisors, let's call them. And it's a whole different ball game. I mean, it was an area that I'd never been exposed to. You know, I'm like some working class British family. You know, just happened to have made reasonably good in America. And you know, this one advisor, I won't give names or the family they manage, but they managed a portion of one of the major Silicon Valley families. And he said to me, he said, "Listen, Peter," he said, and this is early on in the journey, but I didn't really twig at the time. He said most high net worth family offices can own between 14 and 22% of agricultural assets.
14 and 22%.
That's to pass wealth through the generations. And so I'll give a couple of scenarios, and this is where I'm at right now. Because I kind of listened to that, but I didn't know what to do with it. What do you do with that statement, you know?
Mm. What does agriculture mean? Like, what, I'm going to go buy a mango farm? Like, what does that mean?
You know? And so I just happened to, because when you're full-time in real estate, as fortunate as I was at that point, I was networking. I just kept meeting these peripheral people, and all of a sudden I was starting to travel. And so we'll come to this bit later, but my partner, Karen, and I were living the nomadic lifestyle, traveling around the world doing real estate deals. And the more you travel outside the US, the more you see farmland and agriculture, especially in Central and South America, appear amongst your network and people you meet. And so I'll give a couple of examples of why agriculture works for us. So you should think about it like this. We've got a coconut farm in Monteria in Colombia. And so we took 300 hectares, we planted 32,000 coconut trees. And so the beauty about this investment is that you can't get any income for 5 years because you basically have to clear the land, lay the drainage, make sure there's multiple water sources, make sure it's in a location where there aren't any weather disasters. So outside of the hurricane belt.
Yep.
So come down to Central America, Panama, and downwards is my advice. And you basically find the right multi-generational farming team because there's risks in every investment. The question is which risks you take. And so in the same way that a property manager is hard to find that's decent, finding decent multifamily generational farming teams is also hard. But if you do enough research and you have the right contacts, you can do that. And so we've planted 32,000 trees, took about 18 months to go through and do that. And then over a 5-year period, they grow. And I'll give a bit of the economics of this farmland investment.
Yeah, sure.
32,000 trees. Each coconut tree will produce on average 175 coconuts when they're fully growing. That's at year 5.
On a yearly basis, right?
On a yearly basis. Yep. It's a permanent crop. And I'll talk about row crops in a second. And so when you look at that, 32,000 trees, coconuts, I could walk out the front of that farm and sell a regular coconut for 50 cents. That's the worst case for the sale of a coconut. And so you look at the numbers and you kind of you got 2.5 million plus from that farm in income every year. It costs us less than $250,000 to run that farm.
Wow.
The staff we have.
Wow.
So you look at the margin. That's like software margin. That's like being back in Silicon Valley. And that's the worst case based model. You know how we're going to sell our coconuts? We're going to basically be creating processing house and doing coconut water.
Got it.
Because the actual profit on coconut water right now and the growth of that market still, they cannot get enough. And this is an organic farm, by the way. This used to be a cattle farm we converted. So it hasn't been run by big ag and chemicals. We basically sold all the cattle off. We used the revenue as we went through the first 5 years of the cattle, sold them off to run the farm. And here we have a beautiful organic farm. And we're now starting to see those trees bloom in year 5. And so this is the model here. And so you look at those economics and this is, and by the way, you plant a tree, it prints money or produces coconuts between 60 and 80 years.
Wow.
So I'd like to think that I'm Walt Disney and I'm going to come back later in life, but this is for my children. This is to pass wealth multi-generationally. And that is what high net worth families do.
Got it. And talk to me about just a little bit, don't have to get too deep, but into the product itself. Like you say you took an existing cattle farm, which cattle in itself is an agricultural, investment. Why coconuts and how do you decrease the risk on knowing that coconuts will be wanted for the next 20, 30, 40 years?
Well, so I think the beautiful thing about coconuts is every piece of the coconut can be used. The husk, the water. I mean, every piece of it can be used for many uses, oils, beauty. I mean, there is, as a crop, there is not a failure business case with that crop.
Mm.
You know? And so I kind of talk, I mean, we could go on for hours about this.
Yeah,
This is the
sure.
topic. It is so deep and so rich. And I spend between 2 and 3 months of research on every different crop, permanent or row crop I go into.
Got it. What are your top fives these days?
Citrus.
Okay.
It's all about citrus. Yeah.
Citrus.
Pineapples, limes. I mean, anything that is like high quality citrus fruit, there is always a demand for it.
Interesting.
And so we have to remember we're not doing this at scale. We're doing this in raising. We're with farming partners. We help them raise $3 to $5 million between the farming partner and ourselves and a couple of other providers. And we're building small scale farms. Mm-hmm. And we have distribution network through the flight, mostly Panama Canal, through sea container, depending on the crop, to Europe, Middle East, China, South Korea in some places. And honestly, you're always going to get a market for premium citrus products, as an example,
Interesting.
Because they're looking for high quality, high sugar, high color. Mm-hmm. And if you get the right team and you get the right investors behind it and you capitalize it well and the right distribution network, you can make a lot of money.
Interesting.
And so my standard pattern is for people getting into this is to say, start with multifamily, put 50 to 60% of your wealth into multifamily of hopefully value add assets and build that foundational wealth in a predictable and consistent market.
Yep.
Then when you got that, only when you are there, start to diversify overseas in hopefully agriculture assets, which can then take away from the US dollar in case the
World Bank says get lost.
In case the 23 trillion becoming 30 trillion becomes due. Basically, start to diversify you in different currency, different country, and more importantly, in a generational asset, which you can pass through to your kids.
Talk to me a little bit about that. I know as in personally myself being a foreigner, and I'm sure the same goes to you, part of what I think, and it's a bit arrogant, but my superhero powers is my international perspective. The fact that multifamily doesn't even exist in Australia. We don't have the funding mechanisms to fund it on a build to rent model, and so it's a condo market. Yeah. How is your superpower the same? Yeah,
I mean, the beautiful thing about being international, worked on Wall Street for 18 years and lived in every major city, is I saw real estate in every country globally.
And so it's needed everywhere, right? It's a human need. We need shelter.
It is, but you also get to the point whereby I know the first thing I look at when I go into a city is I'm like, what's the square foot price per square foot of like a single family home in this neighborhood? Because I know that in Marin County where I was, it was $1,250 per square foot to a single family home.
Well, I know here in the neighborhood we just bought is $650 a square foot.
That's nice. That's a bargain, mate.
Well, hopefully it's a gentrifying neighborhood. Put it that way.
Yeah. And I also know, for instance, that you can buy a beach near the beach 2 or 3 blocks back in Playa del Carmen, Riviera Maya in Mexico, a beach condo for $250 a square foot. And so you have to be able to understand this ladder of asset type by country. And really have a feel for that. And that's what my global travel and background actually has allowed me to do, I think. So I can walk into any country in any asset class and get a gauge on whether it's worth going here or not.
Well, and let's pivot into the Global Investor Alliance and this freedom lifestyle. Because in the green room, prior to pressing record here, we spoke about the freedom lifestyle. And I want to get to that in a little bit and how you pivoted. But let's talk quickly just a little bit about the Global Investor Alliance. It's obviously an education platform and telling the answers to the test. But why did you want to start that? What was the reason to going out and trying to help educate others about the benefits of your investment thesis, first and foremost, in multifamily, but also in agricultural and globally, right? Global Investor Alliance, not American Investor Alliance, it's Global Investor Alliance.
There are so many reasons. A couple of them, I've got a lot of friends in the UK and Australia who could not buy property because they can't cash flow. I wanted to find a way to get them into the American and other international markets, not only, and give them the comfort and the education to do that. The other side is that actually this came out on actually by mistake, because when you're in real estate, when I'm doing all this stuff, I'm posting stuff on Facebook, sadly, and this other stuff, talking about stuff, and I met people for lunches, and a couple of people who used to work for me started taking my advice and investing. And there's one guy in California, Rudy, who I met him for lunch in mid-2018. And he said, Peter, thanks for helping me out with this knowledge. I've applied myself with your techniques. I've now replaced my corporate salary.
That's awesome.
I can choose what I want to do in life. And he said, why don't you teach other people how to do it formally? And that's what we did. So Karen and I got together. We were both investing independently together on a couple of multifamily buildings. And we said, we can do this. Let's start to get the message out, because there needs to be, we need to bridge the divide, frankly. Those high net worth families shouldn't have all that knowledge to make. No, I don't want to get into this, but 1% richer and richer,
Right, yes.
I want to allow our regular people like us. I mean, I was fortunate with, getting a bit of money to invest, but many people we know could do this. They just haven't got the know-how or the knowledge. And so I wanted to give them the confidence, the models, the techniques, and the ability to do it. And that's so we have an 8-week program to walk people through that.
That's fantastic.
You spend the first couple of weeks working out the mindset stuff, because it's all mindset. If I had $1 for every time somebody joined our alliance, and then after like the first 2 weeks said, well, my financial advisor said real estate's too risky, you should keep it in the stock market. And I'm just like, I'd pull my hair out if I had any, but it's like, it's frustrating. And I'm like, listen, here's the gig. Wall Street is a marketing machine. It's legalized gambling, and so go off on my bit of a soapbox, because they're not real assets. We all understand there's a thing about book value of a company and sentiment-based market value.
Yes.
And that's when the dip happens, is when the sentiment disappears, your portfolio disappears. So, so I can't remember. I'm going on my soapbox already. You got me agitated.
No, this is good. I wanted to. It was about the why, and I think I hear it in your explanation of that. You wanted to have this 1% mindset / 1% access to deals. Right. To the rest of the world, to the rest of the population. And not that you need to be in the 1%, but you can just do a few things differently to potentially replace your job and have more time with your family and have the time freedom, which brings us into the next question, which is, when I first met you, and I know a little bit about you, your whole drive was to live in a sort of, we'll call it tax haven type of freedom lifestyle, and not have any, things attached to you from having to pay the Uncle Sam. But that's changed. Maybe fill us in what's happened in the last couple of months since you've moved back to the mainland, and why?
Well, so we lived over 3 years in 17 different countries as a kind of nomadic lifestyle.
Sounds busy.
Yeah, and so I think I wanted to prove that I could play the tax game, let's say.
Yep.
And I'm an American citizen as well as British, so obviously I'm taxed my worldwide income. So anything I can do to try and, find tax benefits overseas, and there are many legally as a US citizen or resident, you can actually, attain overseas. And so we were both trying to invest overseas by traveling a lot. We were living overseas to be nomadic and have a life of freedom that everybody wants to attain. And we actually end up in Puerto Rico, because Puerto Rico is the tax haven for American passport holders. And, long story short, you pay 0% on capital gains and dividends, and you pay 4% on your company income. Mm-hmm. And I won't go into those finer details, but what we realized was in Puerto Rico was that we became very bored very quickly. And so I'm embarrassed to admit, but the dream of living in the Caribbean by the beach with the freedom we had, is the dream of that is better than the reality of it. Because there's nothing to do there. Right. And you get up every morning and you walk down the beach for 3 hours, and you walk the dogs, and then I get on a couple of conference calls coaching people on investing, and I'm like, well, there must be more to this than that. So actually we moved back so I did my analysis on all the 400 MSAs, kind of sad in that way. And Austin, Texas came out number 1 for the lifestyle wanted with the real estate approach, and Denver was number 2. And we chose Denver because it's a beautiful outdoors mountain lifestyle place where we live. So now we have bars, restaurants, entrepreneurs. There's a tech scene here. A lot of real estate deals are going down, and we're actually, happy as Larry in this location now. So it's been a weird journey.
And so you've had to give up that sort of zero tax pursuit, right? But I guess, and that's really important for the listeners to hear that. One, that living on a beach ain't all it's cracked up to be, right? And for most people, the reason it ain't most cracked up to be is because we are all inquisitive human beings, right? We want to continue to be challenged, and when we don't have that challenge or that that entertainment, I was going to use the word entertainment, then we start to get bored, and that's where the challenge piece, we don't then fulfill our needs as human beings, and we want to keep pursuing it, and then being surrounded by other like-minded individuals. When you're sitting in the Caribbean and you're a bunch of tourists who are on holidays, like. You want to talk business, I could see it happening, becoming old real quick.
Yeah. So the problem with Puerto Rico was it's either retirees or tourists. But I think the bigger problem for us over 3 years was we had no community.
Yes.
Because your nomadic community is not a community. Your nomadic community is a bunch of nomads who aren't tethered to anything or anyone.
That's interesting. How important is that? But that sounds like being the biggest realization to you and Karen. Is that right?
I think at the end of the day, nothing matters more than family, friends, and an entrepreneurial network. We can learn from and grow and help others do the same. Right, so I think that's the life pivot, really.
Well, but you also bring up a good point that it's like being an entrepreneur is lonely, right? It is a lonely gig, and until to be surrounded by, the reason I do this, I've been doing this podcast for nearly 5 years, is because I get to talk to people like yourself who are on the same wavelength, right? And you're living in Denver, I'm living in LA, but when you don't have that on a consistent basis, and you can sort of touch and feel each other, like at a bar or in a networking space, I can see why it gets pretty lonely pretty quickly. But it's interesting. Welcome back, I should say.
Thank you.
We are coming to the end of this show, so I do want to be very respectful of your time. But what's sort of 2020 got in store for you guys and beyond with Global Investor Alliance and agriculture and multifamily and all the good stuff?
Yeah, so I think we're all in a bit of wait mode, aren't we? We're fortunate. Our assets are performing very well. Shelter in place or stay at home, whatever your term is for your country, is a beautiful thing when you own multifamily real estate. And agriculture, we can't produce enough fresh fruit because everyone needs produce, and that's the beauty of it. So I think knock on wood, I'm hoping that the quality and style of multifamily are bought in growing cities with a lot of white collar workers who have just been at home working with the regular wage. And the agriculture angle is pandemic proof. That was never in my risk matrix, by the way. So I think
it is now.
It is now. But I think for us, it's we're kind of like waiting for the end of summer, CARES Act, stimulus checks end, see whether we're the alphabet shaped recovery, the V, the W with the second wave, the U, the L. So I think in reality we're bringing new members in now. We've got a post-lockdown special at the moment because I think there's no bad time to get to knowledge, to start investing. And two things happen. Either this economy keeps going through the election and beyond because the Fed will keep pumping money in to make that happen. Or if we crash, we expect amazing bargains to be had on all fronts.
Right.
Because, and that's the beauty of it.
Well, I think the big thing, two things is like, one, this ain't going to be the first and last pandemic we ever seen, right? Yeah. It now adds a new wrinkle probably to your curriculum and to our investment thesis. But two, we now are in a recession, and three, we have civil unrest. And I don't want to get into that, but the other thing that's missing here is a world war. So with the four things that really can dictate, and we've got three of them. So I think I think the wave's coming, and to your point, like with the election this year, we've got how long the Fed's going to keep propping up incomes. It's going, and then there's going to be the residual, quantitative easing post, stuff, which will only help once you're invested in hard assets, in my opinion. That's right. But in saying that, the only other silver light to this, and giving you're international like myself, is that this is not an American problem. It is a worldwide problem. And, rent's due in Australia, it's due in London, it's due in Mexico, it's due in Canada, and all landlords are, sweating it right now. So, and all countries have to stimulate the economy. So we're all in the same boat together, which gives me a little bit of solace compared to, say, 2008, where it was really just an American problem.
And it's also a housing problem mainly.
Right.
And so the only thing I'll say to listeners is, listen, it's you need hard assets. Because this may be a deflationary environment for a while, but eventually inflation will come back.
Correct.
And so the only way to beat inflation is to own hard assets. End of story.
Yep.
Because
Completely.
the value goes up with the currency. End of story. I mean, I can't lay it out any simpler than that.
Right.
So if you want into real estate, start building now.
Love it. Love it. All right, mate. Well, at the end of each show, we love to get into the top 5 investing tips. Ready to get into it?
Yep.
Mate, what is the daily habit you practice to keep on track towards your goals?
I set a schedule to get up in the morning, block out the time, and actually shower and dress as if I'm going to work.
That's great.
Especially in these shelter-at-home periods. It's so easy not to have that discipline of getting up and showering. Honestly, that's as simple as it gets.
You can see in the camera, I come into my office every day, I do my hair to try and feel like I'm going somewhere because I can't just be at home all the time. But love it. Question number 2, who's been the most influential person in your career to date?
I am reasonably successful because of many mentors. I could not name one or two, honestly, because I've probably been mentored by 10 or 12 of the top people in asset classes in different global locations. It's really hard for me to kind of pinpoint because I'd be dissing off the other 11. Suffice to say, I've had my most growth in life because I've admitted to myself that I don't know much. If you have that mentality and you look at everybody as an opportunity to learn, then that is what I go through life with, and it's served me well. Checking
the ego, right? And then because at that property meetup where you
right, but I was the god of real estate. I didn't do nothing.
Question number 3, in your business, what is the most influential tool? Now, when I mention tool, it could be a journal, it could be a physical tool like a journal or a phone, or it could be a piece of software that you use on a daily basis. So what's the most influential tool in your business?
I'm going to give a tool with the people. So we use Slack.
Yep.
And we have our alliance members in there. And so here's the beauty of the alliance and why I say Slack plus the people. Our alliance members, when we bring a deal to the portal, we have 60, 80, 100 sets of eyes on that same deal, but with different views of the world, different blind spots they don't know about. And we become better investors together. And that tool allows us to get in these meeting rooms to discuss an investment in detail. And so to me, that's the collaboration angle with our alliance members. It's been, we're better investors because of it. I learn more from my investors than they learn from me, honestly.
Right. And it goes back to that, the wanting and needing the community, which is part of why you transitioned your freedom lifestyle, which is really, really important. Question number 4, in one sentence, what has been the biggest failure in your life and what did you learn from that failure?
My biggest failure was buying some beachfront real estate in Brazil from a marketing brochure, having never visited it. So we all have to make the first mistake. Look at the marketing brochure. You trusted somebody through somebody. You didn't do the due diligence. So if you ever invest in real estate, go and visit it or have a trusted third party who truly is trusted. Go and visit it on your behalf. Never invest blindly.
I love it. No, I think that's so important. We get so caught up with the keeping up with the Joneses and the looking like, oh, we just made this investment in Brazil, darling. We feel so glamorous, and not realizing it's a really crap deal. So, Mate, last question is, where can people reach you to continue the conversation? They want to be in your sphere. Where do they go?
Yeah, we are at globalinvestoralliance.com. And there's a little button there you can actually click on and chat to me if I'm awake, depending on the time zone I'm in. But so honestly, we've got a great group of people. A lot of them even more educated than I am at this point. And so, I think that we as human beings invest better together. So if you don't have a group of people, if your family members are saying, oh, don't get into real estate, you'll lose money because they've all heard these stories, find the right group of people, whether it's ours or somebody else's, to collaborate with and learn with and do deals with, because you'll become a better investor by doing that.
Awesome stuff, mate. Well, look, I want to thank you so much for jumping on today's show. I just want to reflect some of the things that I took away from today's show as a bit of a summary. I think the biggest thing that I've learned from you is, 1, your ability to pivot really quickly, but 2, your humbleness in not knowing everything and being able to, that old saying, being a master of all, a trick of all trades, but a master of none, doesn't necessarily apply to you because you've been so humble in your approach and you've surrounded yourself with people who do know what they're talking about and taking bits of advice from each people along the way and then planting those seeds in your own investing career to help you see the brighter future. And I love the fact that you've also really, the blinkers have come off with the freedom lifestyle around community and people and being more focused in and around that and having to give up some of the tax benefits, but you have such a better lifestyle and you're so much more mentally stable than maybe living on a beach in the middle of nowhere, bored shitless. Excuse my language, but did I leave anything out?
No, I think that's it. And just the thirst for learning. I mean, I'm never going to stop.
Yep.
So network, learn, educate yourself, just continue the rest of your life. It's a never-ending journey.
Love it, mate. Well, look, again, thank you so much for jumping on today's show. We're going to catch up very, very soon. Enjoy the rest of your week. Happy 4th of July, and we'll catch up very, very soon.
Thanks, Reed. Likewise. Take care.
Well, there you have another cracking episode jam-packed with some incredible advice from Peter. If you do want to go and check out any of his stuff, please head over to Global Investor Alliance. You can Google that, or you can head over to my website and see the show notes, and all the links from today's show will be up there. If you do like this show, the easiest way to give back is by giving it a 5-star review on iTunes. And I want to thank you all again for taking some time out of your day to tune in to continue to grow your financial IQ. We're going to do it all again next week. So remember, be bold, be brave, and go give life a crack.